Turn it on now. So back in 2000, we had, the .com. That's when we had the crossing, the moving average of the 200 on the daily, and the sky was falling once again. And we got a recovery years later. Took us 3 years to recover from that one. And then the 2008 housing crisis took us about a year to recover off of that one. Almost equal amount of a drop too. It took us 3 years to drop that much. We just had a bigger drop, and that's why the 2008 crisis is talked about more, because it dropped so much faster. And we had a lot of banks fail at that point. This was almost the same thing we had back in 1929. And then we go up to, and these are just basically presidential elections, consolidation. And of course, we had the scare over here that we may be hitting a topping area. And now we're basically now in new charted territory where we do not see anytime soon that we're going to have any major market corrections. This thing's going to have to move up quite a bit. We're going to have a major pullback in order for us to start seeing that. So being said, this is a minor correction that we have. The virus is going on right now and all that stuff, minor pullbacks. Until we get really a big outbreak here in the States, I don't think the market's going to be that shooken up about it, more or less. So just look for a nice pullback, about 38% or so. We should start getting a curling continuation overall big picture. Now let's look at the other aspects where we talk about what we see on, say, our MACD indicator and say a stochastics oversold, overbought conditions. Overall, when we look at this indicator here, we don't want to look at because it's set up for 1 minute. It's pre-programmed to 1 minute. We have to actually change that if we want to look at it for swing trading to 1 hour. So we get the parameters here pop up. I don't know why the settings button's not working. Well, anyway, you change this indicator consolidation to 1 hour, and then they'll give you more accurate settings for swings. You guys, TradingView's having some issues this morning. So daily MACD, we crossed right here for the pullback. Now we're starting to get kind of done with the consolidation. We're trying to push out the high, so we're getting that push, but now we're starting to look like we're starting to get a little bit possible crossing here. We're also getting oversold, overbought conditions inside of the high point here for the pullback to start occurring on a daily level. Now let's go for, and then we can look at how are we standing with overbought, oversold just on moving averages. Okay. 5 EMA, we stopped touching it here, so we should have that pullback to it. Where's the 5 EMA wanting to come back down to? Right around the 330.89 level is where we need it to come down for the overextension. And of course, we still have room down to 329 for the 13 off of the daily chart. As long as we stay above the 13, we're considered bullish on the market. When we get below the 13, that's when you have to be bearish on a daily chart, more or less when you're looking at swings. Look at the hour aspect of it all. Crossing of the 50s happening here. We started breaking down right here, crossing of the 5 and 13 up here. So now we got the nice pullback, retested the 34 right here on the hourly, grinded there for a few days, and finally broke down. We're starting to get a nice downward trend between the 5 and 13, showing us downtrend. And now we finally broke the 50 over here yesterday, which has given us more bias downside move. Our MACD started crossing. Let's see if I can get this thing lined up right. We started when we started crossing right around here, right when it started topping up here. And we've been basically showing the momentum is moving to the sell side the whole time. Sell, sell, sell. What's obvious is pulling down. I mean, anybody with, can see that it's pulling down. So the momentum's on the downside. We're not even seeing it that it's starting to correct yet for any type of potential push. moving averages are not really curling yet for the potential push back up. We are coming down into oversold territory, and that's the reason why usually when we pull back to a 23% pullback, we usually get that little bit of the bounce. And that's why I say bounce is not out of the cards, but we've got multiple things that are telling us that this has a potential of moving down. The daily chart has been telling us that we've got room for more bullish later, but overall, we're overextended for the 5, so we need that pullback to the 5. Our hourly chart is now telling us that we are downtrending. We broke as a good area of respect on the 50 on the hourly, and we're more or less on this downward momentum move. So we've got multiple indicators telling us we're going down. The only thing that's stopping us from dropping any further is 23% pullback right now. Now let's go and look at also another time frame that the market makers play around with is the 4-hour. Okay, so we look at the 4-hour. What's the 4-hour getting ready to do on the MACD? It's getting ready to cross for a downside move. We've also got more or less downward slope happening right here with the stochastics that hasn't gotten into oversold territory yet. So we're more or less on playing still a cycle for a downside cycle move. We've crossed on the, well, we've basically we're breaking down through the 5. We're touching more or less right around the area of the 13 on the 4-hour chart, but we still have room to start breaking down because this thing can start crossing in the next day for the downward move down to that 38%, which where's the 38%? We've got 34 kind of coming up right around the 38%, just slightly above it. We also got the 50 starting to curl up towards that 38% on the 4-hour basis. Now let's go into intraday level. 15-minute chart. 15-minute chart's telling me I'm staying pretty consistent into the close on the downside. My MACD is giving me a little bit of a curl for a little bit of momentum because we're kind of bouncing off that 23. We're getting a little curl on the moving averages slightly. Intraday is telling me that we're moving into consolidation, which is right because we're kind of flatlining here in the last few minutes in the close. And we're kind of in no man's land on the cycle. So, but we've crossed way up here on the 50-day on the 15-minute chart, and we retested it multiple times and see where we can actually see that we could get a potential push back up to that 50 and that trend line for it to come back down. So this is why I say we can have a potential push for more pull down side to retest. And of course, the third time hitting this level would probably be the one that would actually be the breakdown here altogether. So we've got a good thesis of what's could occur, but once again, we got to see what they're actually going to do because they will probably gap us either up tomorrow or down tomorrow when we open, more than likely. You can look at a time frames of like you see where they close us and then they just open us up at this point. They didn't do that yesterday. They do it sometimes and sometimes they don't. See how we got a close here and then they just opened us up here. So with the SPY, the thing is we just never know exactly when they're really going to do that. Sometimes they do it multiple days in a row where they just do us these gap ups from close to open. And then other days, we got a little bit here, not much. But sometimes they don't give us any gap. We didn't get any gap over here. Got no gap really over here. We got maybe just a little bit, not enough to even talk about. But you can kind of expect, and this is the market makers setting the presence. They can open the stock at any price that they want. They can legally open the stock at any price they want. The market makers can do anything they want within the guidelines of one thing that is really the major no-no is they cannot create a market crash. That is the big one. So they have a big, gigantic gray area of them being able to do stuff. So if they want to close at one level and open another level and they start making a market and the stocks start bouncing around stuff, they can do that. It's all within the legal guidelines and stuff. So more or less, this is where I see for the market sentiment where we stand at, and I was trying to explain what I'm kind of looking at overall in general off of it. You guys got questions? Let's start opening it up to start talking about different things, and we can close it off with swings and stuff. Anybody have
So
anything?
guys, if you have questions and you want to unmute, that's totally fine. If you do not want to unmute, you could use the trading room chat room in the dark side server, and I'll monitor that as well. I know you guys got questions. It's just who's going to be the first one that's going to ask. Then we usually tip over, and then we got 30. All right, so Amber Ninja's typing. Maybe she's going to be our first. Maybe not.
No. I was going to ask you a question.
Moto, go ahead. You got your hand raised.
Hi there, here's Moto Guzzi. I would like to hear your read on Tesla, what we can expect for the coming week.
I second that.
Okay. Tesla's pretty much almost in the same situation that the SPY is in. We can go ahead and get rid of these projection levels, I guess, for now. Since we're not moving up at this point.
Looks like Tesla's still alive. The heart rate monitor looks good. It hasn't flatlined.
Not yet.
That's what the bottom looks like, heart rate monitor.
Okay, so finding where Tesla was actually going to be pulling back off of its impulse leg that it had off of this recent move over the last, say, 2 days when we had the nice little pop for basically 300 points, more or less. Off of that pullback, we based basically down here at the 78% pullback. So we're in that area of good pullback area for a good, healthy potential bounce off of it. So you see what we crossed these moving averages here on the 15 and stuff. But you see how that 15 is getting ready to start. You see that 200 right here on the 15-minute chart is getting ready to start crossing again. So borrowing that Tesla does not come down and break these low levels, Tesla has the ability to have continuation. Now, Tesla can also grind for a few days off of this because we can start getting different type of pattern movements. We can start looking for potential patterns like this that could occur. We don't have any real definite quality pattern out of this yet. So being said, it's a little bit harder to detect. As you can see this little drop we had down here, we actually did have a pattern that developed in the pullback. We had that W more or less. Well, right now we're just in a heavy consolidation area. We're more or less flagging at this point with Tesla. Where Tesla's starting to run out of room, that it needs to actually start thinking about doing something soon. We need to break out or we need to break down. Technically, this is what we call a bear flag. So technically, it should pull back down here more. Okay, if we get that pullback, that can give us a better pattern and for us to basically see some sort of move in Tesla for a bigger picture move later, which would be more or less what we'd like to see, because pulling back here into this area here, retesting this zone, and then pushing will give us a better, stronger move later than it deciding to break out right here, because this breakout here is going to have less investors that are going to be interested in it. So it's going to pop and it's going to hit that 61 and it's going to have a hard time breaking through it. It's going to have a hard time breaking through it anyway because it's a 61 level. It's got to get above that zone in order for it to really start gap filling a lot heavier. Because right now we're range bound between the 78 and the 61%. Now, why did Tesla stop where it stopped at? Let's look at the complete reversal side of it. Let's look at more or less, let's change the colors of this one to more or less look at it like an hourly level. Change it to yellow to make it hourly. Okay, so now what we're going to do is we're going to basically measure from Tesla's peak to basically the bottom on the pullback. Since we know it based around the 78, you got a little bit of a wick pullback. You see, you even had a little small pattern right here. You had a big picture pattern that developed, and then we had a small little pattern that developed here. That's the reason why Tesla's in this sideways grind. Now let's go into pulling from the top, and we'll just measure from the top to the bottom. I'll change that one so we can see more or less what, like the 15-minute color. So now what we basically have is from the bottom side for Tesla moving back up, where did it go to? The 23%. Where did it stop at when it tried to make its big hit? The 38. Okay, 38's great. The 38 is the very first number that we have to have in order for us to have one of these patterns that we like to play with in the chat room. We have to have a 38. We have 23, we have no pattern. 38 is minimum. So therefore, Tesla has the ability for a pullback, for a push. Has the ability to create a nice bigger picture pattern. We have to be patient and wait for that. The 23 is the key area. It has to get above this level in order for us to start breaking out. The 38 has obviously been a hard area for us to break through. But once we get past the 23, is game on to the 38. The 38 gets broken. Then we got fun back up here to this nice green line. 862. We're going to have fun going all the way up to 61%. The patterns are set up to get up into 78 to 88 level, usually, majority of the time. But a lot of times when we have a pattern that kind of half-asses it, makes it halfway, and then becomes a failed pattern, we'll move up to the 61 and we'll see the failure. So we have to be careful when we get to the 61%. Overall, I believe Tesla will go back up, borrowing any negative PR coming out on it. Will it break out Monday and do it? It could, based upon a flag pattern here and a failed bear flag. It could pop a little bit. But I think if this thing pops, it'll pop to the 38 and come right back down. If this pulls back down and gives us a nice another little test around here, then when it pushes back up through the 23, it has better chances of going through the 38 up to the 71. Or 61, excuse me. It has a much greater chance of doing that. So I prefer Tesla to pull back just a little bit more before we have that nice pop. We did have options activity that came through inside of this thing. We have a 1200 call going into the 21st of this month. And we have an 800 call that expired yesterday. We have another another 1200 call going into March the 20th. Most of the calls that come through here were for yesterday, though. We have a 950 call for next Friday. 850 call going into next Friday. And we do have a few puts inside here that are trying to pull Tesla down to 450 and 595. So we've got pretty much a little bit of a mixture. We have more calls than puts, but we do have a few. And of course, some of this could be hedging also, more or less. I don't think Tesla is done. I think it's taking a break right now. And it was a much needed break, because how far did Tesla pull back overall, big picture? It came back, okay, off of this impulse leg to the 61. Okay, that's all great. We now know that information and that data. But how much did it really pull back off of its big run? Let's go out to an hourly chart. Let's look for where did the run actually start? Okay. The run really started way the hell back here because you can see how it kind of flatlined here for a little bit and then started pushing up, but we never really broke down. No real major pullbacks. Let's go out to the daily chart so we can see something cleaner. So Tesla basically started way back here in September and hasn't looked back. We have one little dip right here. And that thing's been nothing but a rocket ship ever since. Okay. Let's go off of the big picture. Let's go off and start off with the first little dip buy. How far did it pull back off of that dip buy there? And where are we trading currently today? Right here. What was that? 38% pullback. Was that a real big pullback? Yeah, it was a 200-point pullback. Dollar-wise, that was a big, big deal. But overall, big picture of what it's been doing, that's just doing just the same thing as any other stock would do. Not doing anything different. Pulling back to areas that should be respected. Now let's go down to the actual initial point and see what numbers you get on that. If I can grab this line again. Fighting me here. Let's go down to more or less where we kind of flatline and started. Do we see that number change any? Still 38%, isn't it? Tesla's doing exactly what Tesla should be doing, respecting the Fibonacci's just like it should. I mean, doesn't that look like it respected it almost to the penny on the pullback? There's the reason why I was calling the basing over here 2 days ago off of that thing. Let's go to the hourly chart and look at it and see where we stand on our legs and stuff. Okay, so we had a run up. 1, 2, 3, 4, 5, consolidate. 1, 2, 3, 4, 5, consolidate. 1, 2, 3, 4, 5, pull back and consolidate. So we're freed up to start up something again. This just happens to be the biggest pullback that it's had since the run up. So it has a good chance of serious heavy consolidation. And we also got the more or less that flag pattern. And Tesla can come back down and pull back down to a significant level off of that. Just like we were talking about earlier. Off of this move. Well, you see where we pushed up to the 23. So the pullback would be right here. So in order for Tesla to break down further, we got to cross this line. Now you see what's happening at the from this push to this pull area. What do we have right here? We got the 88 and the 23 or 38 all converging together at that same point. It's where the bounce occurred. So Tesla, to break down and continue flushing down, has to break that line there at 38% in order for it to have any more downside move on it. 38% is still bullish for a potential move. We can also have potential moves off of Tesla for 38% movements for bigger picture moves or harmonics that would be a bullish pattern, but would push up, pull back, push up, for the bigger move later. But I'm not even going to look at that because the probability of that occurring is probably not going to happen. So more or less, we're at the point of Tesla being at a pinnacle point of making a decision what to do. We have negative news. Tesla will come down, break the 23 and flush down to 61. And we'll get it down to the 500s. That's why we have some puts down here. Tesla winds up staying on the current course, keeping its trend that it has basically created off of its healthy pullback here. We get a bounce and we push. We push up to the 800. Get the thing to line up here. 861.25. We hold the trend. We have a good consolidation here. We can still pull back and get a nice pattern right here in Tesla. This is still completely doable. We can break down and push up here. So the probability of Tesla doing this is greater at this point in time in the game than flushing down to the 500s. It has a greater chance of doing a little pullback. It's going to shake some people out. We're going to get a whole bunch of people scared. We're going to get a bunch of shorts interested in taking it down just to turn around and squeeze their ass back up to $861. This is how they develop the market. They're trying to develop something of uncertainty of what's going to happen at this point and how they can play the game to basically create the short squeeze in order to get a little bit more money out of it before Tesla ultimately. Because technically this is bear flag. Just because Tesla comes up to here or comes up to here, it still is going to pull back off of that level. And what would a pullback be if it comes down to this level off of that? Let's look at that. Look at this big picture. If Tesla actually moves from here to here, where would a healthy pullback happen? Right here. 61% pullback off of this level, be right back on that trend line for another bounce for continuation to higher levels up to the 1,000 plus later. So right now I'm looking at Tesla pulling back, running back up, pulling back, and running back to break the high. So let's see if I got a little diagram can kind of help us with that.
What kind of time frame do you think we're looking at here? Any idea?
Time frame? We can use Febs to give us a guess, but it's not going to be exactly a guarantee off of it to actually be able to give us a somewhat of a prediction off of it. You can utilize the more or less the pattern development off of the actual last move and get an idea of what time frames that they're looking at and possibly moving us into different stocks. So we'll go with the 200 levels here. So we'll start looking at right now, we're about ready to start making a move. Could have the pullback happen, and then right around here, here we'd look at for another move about 6 o'clock in the morning. So we could have a pullback at the open. Around 6 o'clock, we could have a push back up. And then at 10 o'clock, we could start seeing the rally back up. And then we could start looking at another move around 11. So more or less, we're starting to see some sort of movement between Monday going into Tuesday at current times right now. As far as the accuracy of these things happening, the accuracy on them aren't as good as the actually measuring the actual percentage of actual time. I mean, or money movements and stuff. But they do give us a ballpark figure because these are calculated with the computer systems.
So I'm just thinking, buy out to next Friday or give yourselves till the 21st.
If you're talking about options, you should be about 45 days out and trying to do anything with this, just to make sure that you have a cushion. You play it going into Friday, it's almost like playing Lotto.
Well, I think she's already got an option.
Yeah, I have one that expires this Friday.
Well, I
But
mean, just
looking
you
to
can
add.
either make the position on it, or you can do a rollover.
Yeah, that's why I was asking.
Dark side. So you're saying that the bigger picture move, it's to do options, do it 45 days out.
You're much better if you're swinging 45 days out. If you're day trading, no, you don't need that, because you're not keeping the trade more than 10 minutes to 2 hours. So, hey, help play Lotto. Doesn't matter. But when you're talking about holding, and you're talking about possibly holding for a week, then yeah, I mean, it's much safer, because the time decay is not going to hurt you when you're 45 days out like it will if it's expiring next Friday. Your teardrop that you're happening between Monday to Wednesday is bad, but it's not that bad. But once we get past Wednesday, it's like rolling downhill fast on your time decay. You get 45 days out, time decay almost becomes the point where you don't even really notice it that much. Problem with most people don't want to go that far out because they look at the price of the options being so much more expensive. Well, that's true and untrue, because it just depends on the ticker. Sometimes you'll find going that far out, the price is hardly any difference, not enough to even concern yourself about. And other times, yeah, there's a hell of a difference. It just kind of depends on the volatility that's being priced into it.
Yeah, and Tesla is so juiced right now.
Yeah, the IV on Tesla is over 90%, even 45 days out.
Yeah.
Whoever's talking is very low. I can't hardly hear you.
Well, you got to look at, have you seen a stock do what Tesla has done in the time frame that you've been trading? Have you ever seen a stock do this in this small amount of time?
Just bend.
Maybe Beyond on its first run up to 200.
Okay, let's look at Beyond.
Jiminy.
How long did it take Beyond to go to 200? I was playing Beyond from the IPO. I was holding on to this thing for over a quarter on a swing trade. So, okay, it moved from $40 to $200. It took almost a quarter and a half to get there. Let's look at Tesla. Tesla moved 300 points in 3 days. No comparison. I have never seen a stock that I can remember that has moved like Tesla has in the time frame I've been trading.
Maybe Amazon with earnings a few weeks ago. I guess it went up 200 points.
Yeah. Has Amazon ever done that in its history before? We had a big drop right here.
You know what it really reminds me of, it just was a lot different in price, was when I started moving last in, I guess I was
Letter I or
28.
EYE?
Yeah, just the letter I, back in 2018, when it just went up and up and up and up.
I mean, even when we go back and look at the old dries, it's no longer even traded anymore. It took it days to get up to the 120 area.
Yeah, like I said, this was a lot lower price, but it was one of those stocks that it kept going up, and I'm like, oh, this is the top, and then it would go up, and oh, this is the top, and then it would go up, and I was like, I was looking at it at like $8, and I'm like, ah, it's just too high. It's going to come back down, and it just kept going and going and going.
And Tesla's a completely different animal. That's why you do have to be cautious with. I mean, Tilray had a hell of a run. It's probably one of the closest ones we had that probably was close to that. But it still took multiple days to get to that run up.
But aren't these just short squeezes? I mean, like Beyond was a short squeeze. Tesla, I think, is a short squeeze. Dries was a short squeeze.
Majority of this stuff is. I mean, Elon said alone, he said about a year or so ago, back when they were driving his stock so hard down over here, we were coming down to these low areas. He was saying that the biggest short squeeze ever is getting ready to happen because they don't understand the fundamentals of my company. I don't think he was lying. This is, as far as I can tell, the biggest short squeeze I've ever seen. Now, it didn't start off at $1, but hell, started off right around here. And of course, when the earnings came out, that was just gas. It really kind of started on this earnings from last, I guess that's where we should say. Because we had pretty much normal traffic going on. So one earnings back in October is where the catalyst started. Look what happened to our 200-day right here. We started crossing there. Just gave us another excuse to pop it. And that became more or less the spark that started it right here is the earnings here. Because they had good earnings then. And we had that nice pop. But it didn't want to really break out till it got past these previous high levels. I remember him talking about the 420 area getting up there because we're at all-time highs up here. And it just kept on going. And so squeeze, yes, it is a squeeze. A lot of people like to say this is, retail that did this and stuff. This isn't necessarily retail traffic that is playing with enough shares to squeeze Tesla up to this point up here. This is institutions that are getting squeezed.
Citron, announced a whole new short on it, right?
Yeah, I think he did when it started topping off up here. Normal short squeezes go up and then they come down because there's no merit to keep them up. Tesla's a different aspect. Tesla has positive earnings multiple times in a row. So even if this is just, for argument's sake, just purely all 100% short squeeze and nothing else behind that, shouldn't we still at least come back down to our previous earning report level, around the 500s? So let's start where we more or less started gapping from one earnings up to our high. 61%. Right around this area would be a realistic price that Tesla should be at before we're probably going to start seeing anybody seriously invest in Tesla for a longer big picture for institutions. Right now, they don't know what the hell to think. This is FOMO. This is fear of missing out, driving this thing up also. And yes, the institutions do get FOMO sometimes. Because you imagine if you were a hedge fund or something, and you invested money into this hedge fund, and they recommended you not to take Tesla, you would probably be going and looking for a new investment firm right now, wouldn't you? Makes them look bad when shit like this happens. Because just think of the money if you got in here off of the previous earnings, where you could have been off of just a pop of this breakout of this next earnings. They could have came in here, bought off this earnings, sold going into the next earnings and not even taking much risk off the table in case they did poorly, and they still would have made a good amount of money. They would have got half of the play. Tesla is a fun ride if you're on the right side of it, but this is also something that is destroying accounts at the same time. There's people who become millionaires off of this stock in the last couple of days, and there's also people that are no longer trading because of it, and we've also got companies that have blown up because of it. If you're on the short side of this thing and it's going against you too much, you can get a margin call. Margin call comes in, just adds fuel to the fire to create a squeeze even harder. Now, is Tesla going to be 1,000 or 1,200 in the next between now and the next quarter? I think it's going to make another attempt before it's over. I mean, look at our daily moving averages here. You even see them really giving us much sign that they want to give it up yet? Problem is Tesla can move 100 points in 6 minutes. Did it the other night. That's why I was saying that y'all guys had to be very, very careful with Tesla. Because the other night when we hit our top, hit our peak point, how many candles do we have here? Let's just go off of also, why did Tesla more or less settle down right here where it settled down at? Well, let's just go off of intraday traffic just that happened in that one day. Our low of the day to the high of the day. Do we see a reasoning of why Tesla snapped down here? And what do we have? How many candles do we have here? 1, 2, 3, 4, 5, 6. 6 minutes. $696 down to $660.59. So $110 was lost in 6 minutes. 10 shares would have been a $1,000 loss. 1,000 shares, $10,000 loss. Or 100 shares, $10,000 loss off of 100 shares. If you had 1,000 shares in this thing, that would have been over $100,000 you lost in 6 minutes. I have not seen stocks that move this fast. You need to be scared of this stock. You're going to play it, you need to play it with proper size. Options is probably not a bad idea because you know what? If you're screwed up on the options, at least the only thing you know you lost is your contract. So options is probably the better route when it comes to this because you go out and get yourself a couple contracts inside this thing. You can make some damn good money on it and know that you've got only maybe a few $100 for your possible loss. Because what's Tesla trading right now? What are the contracts at? Like when I looked the other day, it was like 100 and something bucks.
If you go way out.
So let's just go into Friday. What's Friday's expirations right now? Anybody got a chain up?
I don't even know where to start with options.
Well, the key thing with options, if you're just going what we call naked, you're just going long, which means that you're going to basically buy a call for it to go up, or you're going to buy a put for it to go down, but you're still long either direction.
The 800 strike, 24.50.
Okay. So one contract would set you back $240 $40.
No, $2,550.
$2,500.
Yes,
No, that's
they're very
ridiculous. Yeah,
big.
because it's 100. Yeah, 100 shares. I'm sorry.
Yeah.
Doing my math wrong. So $2,500 for basically you're going to lose off of one contract. So you can make some serious money, but you need to make sure that you're in the right side of it. Just with one contract.
IV is 101.
So that's where, you know, I don't want y'all guys to be scared of stocks and stuff like this, but this is a stock that it's like you're poking at a dangerous animal and it can come back and snap at you real easily.
Poking the bear.
And stuff. So I'm going to play it. Just realize that whatever you put into it in options could be 100% loss. If you're going into the equity side, just realize that that could be a serious loss. So just be
like
very, very
poking a stick
careful.
of dynamite in a fire. Can blow up in your face.
Right.
Yeah, but you could also win, which Brian did and several other people have too.
I bought one contract a couple weeks ago, right before the spike. I held it for, I think it was one day or maybe 6 hours. And I paid about $850 for the contract. I made almost $16,000 on one contract.
How'd you know to buy it?
I have a crystal ball, don't we all?
No, Janny won't share. He's got his
Yeah.
8-ball and he won't share with us.
You have to do your due diligence and look at the charts and listen to the news and just research.
Right. And once you get far enough into the money on these things, once you get in, you get at that best possible entry point, then you can play these things and you set back in comfort, because then you can just read the charts and say, okay, if it pulls back, yeah, I'm going to probably miss out on hundreds of dollars on a pullback. But the potential of it still moving is good, because you got to look at it as the aspect, okay, a normal stock, if it pulls back, you may be down, you know, a small amount of money, like, you know, $100, couple $100 or something on the pullback, you know, $500 or something. When it comes to it, you got to look at more or less, you got to play this the same way you play any other chart. But the thing is that you got to realize that the volatility in this chart is running like a penny stock that is in the thousands in its float, not in the millions, because of how it can move this fast, this quickly. So you have to have your risk management set up as saying, hey, this thing gapped up, and if I caught it for the 300-point move, I've got to realize that it's going to be breathing probably $25. So let's throw the ATR on here and see how much of the breath we actually had moving on this stock. So at any given time, Tesla was moving $4 per minute. Of course, at its peak, it was moving about $12 to $13 off of that massive move.
Wow.
So you had to actually look at more or less per minute, you're moving about $4 average. You have to give Tesla at least $4 of breath. And realize when you get into a parabolic run up, like at the open, or a pullback at the close, that's going to probably be about 3 times greater than what your average is being. And let's go out to how much is it moving per hour. That day over here, it was moving about 30 something dollars per hour. Okay. That's not that big of a deal. On a given day, moving $55 per hour. Still not that big a deal. I mean, hell, Amazon does that. That's not a big deal. But what is a big deal is how much is moving per minute. Because you can make a lot of adjustments in a 15 minutes time frame. You make a hell of a lot of adjustments. So if you really want to know what your risk management is off of these things and go, man, this thing's running up and it's doing so well, you need to be starting to think, how far can these things move back? You know, I'll tell you, I was playing this stock right up here before the drop happened. I started getting that feeling that this little pullback wasn't quite right and we were getting too close to the close. So I got out of my position. Otherwise, my ass would have hurt a little bit on this deal, especially with the sizes that I play. Just didn't feel right. And more or less at the aspect of it all is you got to basically watch how the stock is breathing on that. How much more do you think it has into it? And when you're getting to about 15 minutes to the close, you now got to realize that the stocks are going to start making big moves like this on any stock. Some of them wait to the last 30 seconds. But I know within about 15 minutes of the close that I got to start worrying about possibility of movements. So what happened right here? We're at 345, 347, 348 is when the drop started happening. 15 minutes into the close, they started making a change.
Is that all profit taking, Brian?
This is some profit taking, I believe, that also turned into stop losses that created a cascading effect. Because if it was more profit taking, it should have came down to about VWAP and stopped down. This is a cascading rolling effect. A lot of people probably had their stop losses at VWAP. A lot of people had their stop losses over here off of this 23. And once these things started pulling down, it was nothing stopping the snowball from rolling downhill really fast. So your best aspect is to start looking at how these things are kind of playing out. And of course, when I played Tesla, I was playing this thing on a 15-second chart. So I saw a lot more data happening off of this than just what this 1 minute is actually showing us. See if I get the day right here. What day am I on? I hate when I move the chart around. It screws me up like this. Yeah, here we are.
Hey, Renee, if you have time, message me in Discord, please.
After class?
Sure, whenever. I couldn't find you.
What's your name, hon?
Amber Ninja.
Okay. Will do.
Thanks.
So a dark side, just so you know, I don't know if you were talking about when you're moving on your chart. If you go to wherever you're wanting to zoom in on the chart, and I think it's control. If you hold control, no, it's command. So I think that's.
I don't have a command.
I think it's. I'm trying to remember which one that is on.
It's control on.
Is it control? Yeah. So if you zoom your wheel in and out while you're doing that, it locks wherever you're kind of held down, and it'll only zoom in that area.
Okay.
So if you're on a big, huge chart, several days, and you want to zoom into one area, I just hover over that area and click it. Shortcut tip for the day.
Awesome. So more or less, when you with this thing, I don't even remember what I was going to even say at this point. Well, anyway, The Febs, that was what I was going to get at. Looking at more or less how you can kind of get an idea that things are going to start falling apart is more or less you got the breathing room of the RTI of kind of telling you how much is kind of moving per minute, more or less. And of course, that's going to be spiking up as the stock's moving. So you're not going to be able to detect this big of a movement quickly, other than knowing that, hey, I got a big move getting ready to happen in the close. I got a big move that happens at the open. You can expect that somewhat. And 15 minutes to 30 seconds of the close is when usually the stocks get the most volatile. I mean, sometimes we wait all the way to 30 seconds before you see that quick move. And then sometimes you can get it as early as 15 minutes out. You don't usually see it like 30 minutes before the open. So that's why I say 15 is usually kind of the sweet spot. I start looking at getting out of positions if I don't want to be in positions holding out around the $15 area, off of that. These, I've never seen one move this much in a 15-minute time frame. But this one here is like a historical one, you could say. But at the same time, I utilize the Febs to kind of help me along the way is trying to figure out if the stock has movement and will it break down, how far the breakdown would occur. And more or less like an average move up is saying, hey, I see this popping up here and I think it's going to pull back. How much pullback and when would I cut it? Is just utilizing it on a micro level of looking for this move to this move and saying, okay, if this stock winds up breaking down past the 78 level and gets down to the 88, then I'll probably cut the trade just off of this micro pullbacks. Whenever I'm playing something that's this dangerous, I'll be watching these movements and I say, okay, am I breaking here? If I'm going to start breaking, I'll start cutting it and stuff. So, and you can just run these things up to each individual point. See, it came down to the 23, starts bouncing, breaking through highs. I'm good, so I don't need that anymore. And go to the next level and look for the pullback. 61, fine, got the push, no big deal. Look for your next movement here. Pull back, just fine, no big deal. Big deal. See how it breaks right there? This is the moment that you should have been if you're in this trade. And you should have identified that this was not going to work. It took a 100% breakdown.
Oh, that's amazing.
This keeps me in trades longer a lot of times, especially on the uncertainty areas and stuff. But you see, when this happens, yeah, I lost this point here, but I still have all of this stuff I had on the run up. But I'm not caught in the middle of this crap. That all the way down, that $100 drop. And these also are why events like this happen, that you need to have your stop losses. You should have it set up to where you're got your software set up where you have more or less profit taking at PT areas that you're going to take profits. And then basically my hotkeys are set up for profit taking, stop losses, all at the one keystroke of the entry. And I have it just set for $1 up, $1 below, and then I go into my software after I enter the trade and I manually adjust it and say, okay, I think it's going to go up 3 points. I'll adjust that $1 up to 3 points higher and then update. And I see my stop loss needs to be 30 cents. I'll move it from $1 to 30 cents. If I feel the stock needs $1.50 stop loss, I'll move it down $1.50. But my stop loss that I use is not a stop loss that I use for getting out of the trade because I don't have discipline. The stop loss is the oh shit stop loss for these type of moments that happen. So, and the stop loss will move up over time as the stock starts moving up. So the stop loss would turn into the worst case scenario moments. So something like this, where we had a nice continuation upward movement, I would actually had a stop loss, more or less, knowing that Tesla was moving $4 per minute would have been more or less from here to here. And my stop loss would have been right around this area here. That would have been a $30 loss. But that's the oh shit stop loss. So I don't lose the $100. Now, this is an extreme that I don't normally do. You know, on a normal stock, usually that stop loss would be maybe $3 down off of a stock that moves $6 up. I'm just showing you more or less in perspective. I'm looking at more or less the major impulse move of the major wave of it being the stop loss that's a hard stop, because I usually will manually cut the trade up here manually myself before I even let it get down to that. This is just in case Trump made a tweet and I didn't know about it, and because he doesn't tell me things. So more or less, the market just crashed 3 points in 1 minute because I've been caught into those situations. And those are the things that still bite me in the ass today as a trader, is the uncertainty of the unknown events that happen. And we saw that happen with Boeing the other day. We were running it up just fine, and all of a sudden it pulled 3 points. And you're like, what the hell just happened? Everybody's looking, scrambling for the news. And then here comes the news kind of trickling out with the audio squawks before it even comes in text. Yeah, they said that they found another software flaw. Okay. Well, that would have been an area where you may have had a no shit stop loss on that. But it's also based upon how much you think the stock can actually move in a matter of minutes that you're going to be watching it and stuff. So manually stop yourself out, but also have yourself the worst case scenario stop loss so you don't blow your account up also at the same time. Give yourself breathing room, more or less.
Speaking of BA, can we go over BA a little?
Absolutely.
Thank you.
What do you want to talk about?
Well, just what you were talking about, actually.
When it made that big move?
Yeah, yeah. And I
was,
really didn't
2 days
hear
ago, wasn't
news that I thought was so terrible. Usually BA just bounces right back on any negative news. And now it just kind of looks like it's consolidating.
I think that was 2 days ago we had that. Yeah, I think it was Thursday if I remember right. Okay, so let's go in 1 minute time frame around Thursday. May need to clean my lines up. I trade BA way too much. Now let's just clear it off and start over thick with it. I think it was this one right here, if I remember right. Yeah, that was it. So we had the announcement of them, the FFA came out that said that they're done with their testing of the flights, and that they found that the Boeing needs to go back and correct some software, okay, and they should be good to go or something like that. So we had the nice pop off of that news, started running the stock up, and we had a nice run up happening here. And then we get an announcement after this thing had been running for about, I don't know, 15, 30 minutes or so, maybe close to an hour. We get the news all of a sudden that comes in and says, that came out from them once again saying that Boeing has another software flaw or something, making it sound like something completely different, which is basically they were just basically restating what they already had stated. They just kind of worded it a little different, you may say. So the algorithms got a hold of that and then yanked us from the 42 up here right down to the 38 in just a matter of a couple of minutes. A massive pull. Is that right one? No, it was over here. Yeah, it's over here. This was early in the morning. There it is. That's that spike. So we had that massive pull right here. And they snapped us down. Yes, I remember it was near VWAP. And so you see what happened in 1 minute. We went from $40 to basically $30. $10 snap in 1 minute. This was firing off stop losses and everything else. Algorithm movements. All this was. Computer got a hold of a keyword, massive snap. And then reality set in. It's like, wait a minute, they're just basically saying the same old thing, and it just went right back up to its level. So this was the breaking news here. Thought that was a little bit long over there. This was the breaking news of it. Then we got that update, 15 minutes later or so, boom, get the drop. So more or less from the breakout of the breaking news to the push up here, how far did it pull back? 78. See why Febs are so important, guys? The algorithms play these numbers. Popped us right to the 78 and pushed us back up. We also have the 200 on the 1 minute chart. Now 200 on the 1 minute chart's about as good as a wet noodle, but it still somewhat can be supported. I don't really pay attention that much to the 200 on a 1 minute chart like I do on a daily chart or 1 hour or 15-minute chart. I just use it more or less having it on all my charts because when I see it, it becomes a speed bump, just like VWAP can become. More or less why it pulled back here is because it was a 78% pull off of the actual news. And we bounced right off of it. And this is why I have my stop losses right around this area or lower. Is because I'm looking for this much of a pullback is still okay in my book. That's a $10 drop. But the thing is that you still have the opportunity of it moving back up off of a bounce. You should be taking profits along the way when you have breaking news like this. So as the stock is moving up, you should be taking profits. Here's your entry points. Pullback 38. Should be taking some profits. Here's another pullback. Then you make it to the 23. Continuation push. Nice strong. This is a nice strong move. Look at the moving average separation we had here. Nice and far apart for that continuation push. The only negative thing we had here was that algorithm got a hold of the stock and pretty much killed it. This really turned some people upside down. But you know what that did? That created a buying opportunity for anybody that missed that run. That's all this did. And that's the reason why this thing snapped back as fast as it went up. You probably didn't catch this move. You probably couldn't have caught that move. Unless you had a more or less a market order in there down at the 78. It says it pulls back down to 78, then get me in, which is a risky trade still because you're still speculating. I do that sometimes, but I don't teach people to do that because it's a risky way of trading. But sometimes I like to be risky when I take trades. More or less, the pullbacks happen off of this run. Now look at more or less, when are we going to actually start getting past this? When does this look like it's a good move? And if you feel like, well, this thing went crazy, and should I get in it now or not? What is the news? I missed the big move. It pulled back. Do I have a dip buying opportunity? Well, you kind of have one here. Well, let's look at the overall from the move that it dropped to the point it pulled back down to. And where is it actually recurring back up? It's pushing back up to the 88, 78. Looks like it's wanting to break through, and it's still holding this area. You don't have any good, more or less, anything telling us that this is going to be that great of thing. We got the consolidation push saying this is not good. We've got momentum of the MACD not saying it's not good. It's not good, not good. And we come back to this spot here. This is starting to look a little bit better. Okay. Starting to hold a little bit. We're getting a MACD crossing. We're getting an upward trend off of a stochastic starting to give us that. So now we've got a buying opportunity right here. We've got a green light. You could have waited until the 50 on the 1 minute crossed if you want, but you have a green light right in this zone to take the trade if you missed the initial move. for continuation push, because you got a nice MACD starting to cross. You got a nice pullback opportunity happening here. And look at more or less how much do we have off of the breakdown that we have down here. I'm measuring this thing in the wrong direction. Let's go from the low point to our high point. See, we're holding the 38 area. So this right here is telling us this is a decent area of potentially buying it. And at the same time, we've got a setup that's starting to occur with trend lines starting to happen. That we're starting to see some basing right here for it to either pop or break down. But we've got indicators that are telling us this is an upward move, not a downward move, because the momentum is moving into the buying side. So now you have the dip buying opportunity if you would have missed for continuation push. Where would you take profits off of something like this? You start taking profits around the 127 push, right up in this area. That's where you take some off the table, because if you don't, this is what happens. That's why you always want to take profits around 127. And what happened the rest of the day? Grinded on the 127 pretty much into the close. So even if you miss this crazy move here, you could have still made a little bit of money off of this little run up right here. Still gave you that opportunity. And it would have been a safer trade too, because you're not, at that point, the news has been digested long enough that it's not going to make these crazy moves like this, because it's settled down enough. It's going into a trend phase. The indicators even telling us we're moving into trend right here. We got that set going for us. So this is another reason why you have, oh shit, stop losses. Overall, big picture, how far you can go. Just look from here, your bottom to your top wick for your profit taking for your next run up would be right here. You can also use
dark
that.
side. You also want to kind of go over the differences in the moving averages. We're having some discussion in chat about that. Demetrius was saying that he was told to use the 200 as support, and then also showing direction, the 20 and the 200, both SMAs crossing. I know we had a little bit of discussion about this, I think last week or the week before, where we talked about how different moving averages can line up on different time frames and how they're used. So I don't know if you want to touch on that a little bit as well.
Moving averages will change on different time frames, like a 50-day moving average right here, which is the green line. You see where it's right around this zone. I hit the change the time frame. It's going to move my chart. What I push here, Josh? Just hold the control button down.
If you change your time frame, it may actually still move, but once you get it changed, then you can go zoom back into that area.
Yeah, that didn't help.
Yeah, so
I
once you
I
go,
thought you had the magic trick here.
so like once you want to zoom in right there, just hold your control over where you're wanting to zoom in, and then you can zoom with your mouse, like the scroll wheel.
What I find a lot of times is the 13 EMA on actually it's a 10-minute chart, and will be pretty close to, sometimes the 15 do, also will be really close to what a 50-day would be on a 1-minute chart. So a lot of times the moving averages will be close to the same, like a bigger number on a low time frame will be a lower number on a higher time frame. Really close in representation. So if you use like 13 on a 1 minute and go to the 13 on a 15 minute, of course they're going to be completely opposite because they're measuring the differences. So you got to look at 13 on a 1 minute would be a 50 on a 15-minute chart. You'll see a lot of similarities on those aspects there. But The moving averages, I use it more for kind of identifying trend, kind of identifying things to stop. When I'm on a 1 minute chart, I look at it for more or less how far am I getting away from the trend line on the 5. How well am I staying far apart, nice and fat between the two? As far as holding trend, when I start seeing it starting to pull back, it's starting to get closer. Then I'm looking at it more or less as potential reversal starting to occur because they're starting to get skinnier towards the end. So it means it's going to probably wind up crossing as a possibility. Using it for hard support and resistance, not really. I mean, daily, hourly chart, yeah. I'll use a 200 and a 50 on an hourly chart, 200. 15, a little bit. But when it comes down to a 1 minute chart, 5 minute chart, they're speed bumps to me. I don't, there are enough traders out there that trade on the 8 and 20 because those are the industry standards out there, that when the stock comes down to the 8 and 20, you'll see some sort of a micro reversals on a 5 minute chart or a 1 minute chart. Will they hold substance? Not very well. Not as well as you will get if you utilize Fibonacci's. Fibonacci's will completely, once you embrace the Fibonacci's, you'll probably want to say, why do I even have moving averages on my charts anymore? Well, you still need them on there for a basic idea of what other traders are looking at also. But they should not play within the role of that's the only thing you use and think that you're going to be a successful trader. Because if you trade with just EMAs and SMAs, good luck. A lot of people tell you to do that because honestly, a lot of these people that are in the education field, that they're getting paid by both ends. They're getting paid by you as a subscriber. And then if they start recommending a service, say I recommended TD Ameritrade, for example, as a broker or something, and I'll send my customers over there, and I'll give you some credit if you go to this broker because you're getting a credit for going to the specific broker that I recommend. Well, I get a kickback for sending you as a customer. These broker firms want you to teach this crap that really doesn't work very well because they're taking your money. They're playing against you. So it's a game. I mean, if you want to know if somebody's tied into that stuff, just ask them for their IB contracts. It's anybody that is dealing with the brokers and stuff will probably have that. And then some of these big gurus you probably have heard of or seen have these type of contracts set up, and they're getting paid on both ends. So be leery on what you learn out on the internet with a lot of this stuff. Moving averages do need to be respected, but they hold about as much water as, like I said, as a wet noodle. They're just representing the average of the candlesticks over the last so many candlesticks. So if you're looking at a 20-day moving average or a 13-day moving average for a daily, that's how many days have gone by. You're looking at a 1 minute chart, that's 13 candles. It means the last 13 minutes have gone by. That's what the average of stock's been. The last 20 minutes, the average of stock been. Okay, so what? I'm on a 1 minute chart and I've looked for the last 20 minutes, the candles have been consolidating. Okay, fine. How the hell is that supposed to help me? It's been consolidating for 20 minutes, and the average is now flatlining on the moving average. What does that represent? This represents that the stock has been moving in this area for the last 20 minutes. So they are decent indicators for certain purposes, but you should never use one indicator for trading. You need to utilize more or less the setups, look for patterns that are going to be recognized by algorithms, market makers, and other traders. You need to be looking at more or less indicators to help you give the bias direction of the stock and stuff. So I look at a moving average is more or less I'm holding trend. It's keeping my eyes on the stock longer for holding the moving averages. I know when to pull back, I could get a little bit of a bounce off of these areas, but I'm more concerned about the Fibonacci's being broken than the moving averages, because those are the ones that really make a big difference if you're going to be able to stay in the trade or not. Because Fibonacci's can be drawn at every time frame, at every level, micro levels. You saw me doing it on a 15-second chart, and the Fibonacci's were holding. Once you embrace Fibonacci's, everything else just starts getting thrown out the window, because that's pretty much how the market's moving the stocks around with the candles and everything. So you do want to utilize some of these tools, because they will be respected. I mean, the 50-day and the 200 on the daily, the hedge funds and institutions are really heavily into that. So you need to be respectful of that, because they will trade around that. The market makers do trade around the 5, the 13, the 34, and the 50, and the 200 moving averages. That's what the systems have been programmed with. The industry standard is the 8. That's the T line. A lot of retail traders use the 8. A lot of retail traders use the 20. They will make a difference, because you'll have enough people trade off the same subject matter. Then you will see a difference. So I look at these type of indicators as more or less speed bumps. I respect VWAP more than I respect a moving average, because I know that the institutions are playing off of VWAP. This is the area that is the equilibrium of the day of the stock, and this is where they're going to be trying to buy or sell off of those levels. More so, you won't find institutions buying and selling off of moving averages on an intraday chart like they would on a daily chart. So VWAP on an intraday level is more respected because the institutions are playing off of VWAP itself. So therefore, you'll have more of a sense of direction with it. And that's why we say if you're above VWAP, it's considered long. You're below a VWAP, it's considered a short, because it's more or less the equilibrium of the day of what the stock is actually doing. Whereas what you use for moving averages, I frankly could care less what you use. I just tell you what I use. I use it because I've read enough information about it, what they utilize. I've seen the consistency for trading as long as I've been trading with these numbers, that they work. So I stick with it. I've bounced around the 9, the 7, the 8, the 13, the 10, the 3, the 4, 21, 20, 55, 200, 100, 400. And it all comes down to is whatever you see that works for you, just go with it. Just stay consistent. That's the key thing. That's all I want to see out of you guys, is consistency out of it. If you see a reason that you think it's going to work, go with it and stuff. But just like Fibonacci's, moving averages will be respected at all numbers. You can make an indicator fit a chart, but the key thing is does it work 90% of the time, or does it only work 50% of the time? That's what you got to answer yourself. You got to back test it to make sure it works. Go through thousands of charts, back testing your theory of the indicator you want to use to prove that it is being consistent, and then use it if it is. If not, toss it. I mean, there's hundreds of indicators out there.
Can we request now the swing idea?
Yes, go ahead.
Can you look at, I have 2 requests. Just now, Apple is hitting that China stopped the plant. And the second one is Shop. If you can see the Shop first instead of Apple. Shop has been long running since continues. And I think on daily, it's need a break here and take a breath.
Well, Shop did push up to 127 a projection level, so it is more or less, you could say, a breath. Yeah. Actually, I was going to be looking at this as a swing idea, but somewhat weary about the swing idea until earnings happens, because we got a pattern that's developed right here for Shop for a pullback. So earnings is coming up in how many days? That line usually throws me off a little bit. 4 days. Okay, so what I'd like to see out of shop is I'd like to see him miss or guide lower. If that happens, we're going to have a nice drop right here. It'll pull back to about 410. Right around that ballpark, give or take. My numbers may be a little off here. See, if you just barely move it, see, I was off by $2. So you got to have these numbers exactly right. So about 412 is where I'd like to see shop pull back if they miss. If they beat, then you can see a push that's going to go up to about 516. First, they're going to have problems with 500 because of psychological issues. Now, it'll be a little hard for it to break through that. But shop is a beast. When it moves, it decides to move. So I would be shooting for a PT up here around 516 or so if they wind up beating, which would stretch my pattern out further, but still would be okay for a pullback later down the road, maybe going into a later date once the newness of the earnings report kind of dwindles off. And of course, if we hit these areas, 500, once again, it would be an issue to break through before we have the real breakdown. And we'd have to adjust our PT target at that point to a higher number to up here to pullbacks only to about 4.25. So I would not be trading shop for a swing right now. I would wait until the earnings report comes out. I would play shop as intraday as the earnings is firing off. And then once it settles down, then I would look at taking a swing trade off of it. And more so, I want them to miss for me to do the swing trade because I want the downside move. I don't want the upside move because there's way more money on the downside than there is on the upside with shop right now.
Is that what your opinion is from your analysis, that it will miss?
I haven't looked at their fundamentals, so I'll wait till the report comes out. I never speculate ahead of time of what a company will do. It's been ran up. It has already ran up already. So even if they beat, technically the stock can still pull back. So I do not go in and assume that a company is going to do well or bad and I'm going to play going into earnings. I never do that. I wait until the news comes out, evaluate what's happening, and play the price action as it occurs.
You don't play it up to earnings?
Yeah, I'll play it up to earnings, but I get out before the earnings report.
Right.
I'll play earnings itself when the breaking news comes out.
Right.
But
okay.
Unless I'm in if I was in the stock for investment wise, which I do sometimes for swings, if I was in here, gotten in here on a nice long position and I was going into it, I would take a hell of a lot of money off the table going into earnings and hold a little bit off of it. But when I see a pattern like this, then no, I would cut it completely because this is a bearish pattern. If I didn't have this pattern, and it was more of a bullish pattern, then I would more or less stay in the trade because I'd be so far in the money, it wouldn't matter. But the last thing I want to happen is to be into this stock full-fledged, go into earnings, and then they miss, and I wind up losing 38% of my profits.
Dark side, quickly one more, NEE. So shop I missed on 410 my entry basically, and then I was looking it for come down, but it didn't give us a chance. Anyhow, NEE next is the next era energy. It's on the top.
Yeah, that one's definitely looking extended. Does have a little bit of a topping candle, looks like, on the weekly. So far enough out from the earnings. We did do a pullback on the daily, which is just fine. So we're not really overextended. I'll get rid of this. Don't need this.
Sorry to interrupt you. Josh, it's heavy snowing here. You were asking.
Nice. Yeah, ours has stopped, so our streets have melted.
We got the pullback here, and then we got a reattempt of the highs. So I'd say that this thing does have a little bit of a topping effect, but I'm in an overbought territory, but it's really not ready to break down. We do have a small reversal candle kind of popping up at the top, so I would not try to short this at this point in time, not yet. And let's see how much projection level we've actually got off of this. We haven't had a hell of a pullback. This one makes it a little bit more difficult because we don't have much of a pullback. We probably got a pull here, and we've been trending pretty much ever since to there. So this thing keeps moving my damn drawing tools around on me. That's not the one I wanted. The hell's my extension level at? No, there we are. Yeah, we're already way over on that. We are coming up to a resistance area, and that's the reason why we're just kind of stopping at this point. So it's going to have to break above this area here and for it to have a continuation push. Otherwise, it's basically double topping for a pullback. You can see where momentum is kind of drying up a little bit off of this. Now we're looking at more or less at $75 psychological number. Could try to get that last bit of thrust up to 75 before it fails. But if it does that, it needs to come back to that line and retest. Otherwise, I would just keep an eye on it and see what it's starting to do. If we need another, this is somewhat of a reversal candle setting up, and where our MACD is kind of telling us on the daily. But our moving averages are still showing us a strong trend off of it. So we got to be somewhat cautious that this could be just a small micro pullback for continuation. And your last impulse leg that you've actually moved off of more or less has the ability to be pushing up to this area right here a little bit further. We just pulled back to a 23% off of its last little run and bounced. So this is still positive momentum for the upside. If anything, a consideration of trying to short this thing for the downside move would be early, a little premature at this point, and you do not have any pattern that is setting up in this chart on the daily aspect that shows that this thing is basically doing nothing but uptrending. You know, and you look at the overall big picture of how you've been kind of in a trend phase lately. We're kind of at the top end of the trend. So yes, we could have a pullback to the bottom of the trend line, which would be down around this level right here. So you could get a pullback, but we haven't had any real great pullbacks other than this one here in the last quarter. So I'd just be cautious. This isn't something I'm going to tell you Monday morning, get into it and just short it. I'm surprised this thing's keeping on going. Energy, what type of energy do they do? Because the crews have been kind of getting hurt lately. They must not be in crude. You got any other ones?
Apple and downside because it's a 6 hour, 2 hours ago, the news came from China that China is blocking the Foxconn plan to restart the plants due to coronavirus, and it's a short idea for Apple. So this news will hurt or not, I don't know.
Well, I think if the SPY breaks, Apple will move with it. You see 38% right here. Pretty much the same problem we've got with the SPY was at the 23. So I'm more or less looking at Apple. Let's see where I'm actually measuring that. That's from days ago. Go back out to an hour chart, see what I got. Yeah, that's not relevant data anymore. So yeah, Apple does look like it could have a little bit. It's underneath the 23 right now. And as long as the if we get that pullback in the market, then it should help it out. Let's see, we got 15. Any decent patterns? Got kind of a screwed up one there. Negative enough news, and Apple may be the reason the market pulls if that's if your news is going to have merit. I don't know why this thing's stuck out here.
I can also see the yesterday around 2:30 some puts activity with 439K premium for 290, but it is on the June 16/9 290, which is so far away, which cannot be considered for this news. But still, this news heard 2 hours ago, and like there is a lot of talk that it's gonna down because they are going to close completely that plant for a few days.
Well, a few days isn't going to hurt them. A few weeks will. So, we are in a downward momentum right now. So pretty much the run up is kind of done right now with Apple. That's why the momentum is drying up. That's why it's more or less consolidating for the last few days since its earnings. It's more, I don't really see a good pattern to be trying to short it right now, other than it's just a all-time, or not at all-time highs. We did do a split, but I mean, it is at all-time highs with the current records we have. So I don't see a good pattern to take this thing down, but I mean, it is a short setup more or less on the hourly, and the daily's momentum is starting to dry up on it. So if you want to take it quick, take it down to around this 311. That'll be where the first pullback area off of it, but it doesn't have a super clean pattern there. I usually trade swings off of patterns, not off of just because it's at the top and just want to take it down. I want to see a much cleaner pattern, because when I get in them, I want to stay in them and make sure they work out. But I think Apple does need a little bit of a pullback, just like the market it does in general. But I don't think Apple's done moving up overall. And going into the next quarter, I think there'll be a pullback, just like the market needs to pull back, and then it'll start pushing back up. So it depends on how long you plan on holding to. All right. Jenny, you have any tickers you want to look at? Go across real quick. We're already pushing into 2 hours.
No, nothing.
Okay, that's simple. Ones I was going to look at is more or less the shop, which we already went over. We've got earnings with Alibaba coming up this week, so it's one to definitely keep an eye on play. Because I mean, they're Chinese company related, so they're going to be dramatically affected off of it. We've already got the pullback kind of started off the pattern there. It already looks like it's a pattern completion. Yeah, it's already completed the first stages, first PT. So could have a little bit more downside move going into the earnings, but the earnings is in a few days. It's like, I think around Thursday, I want to say. So I think we could get a little bit more slippage off Alibaba, especially if the market winds up moving. I'm more or less looking at what Alibaba reports is what I'm more key interested in to them. Before he's playing them. Wasn't a whole lot of good looking charts this week.
Yeah, I feel like and I was out a lot, but I feel like the Market's kind of going through this weird cycle right now. I don't know if it's just uncertainty, like people are trying to see where everything's going to settle down, but it seemed like there wasn't a lot of momentum in the market.
This TGTX, I'd like to see this one kind of in the top in there for a potential reversal right here. We got the nice pattern completion over the last pretty much year that's kind of developing. So I'd like to see this one start kind of curling back. We're still kind of far away from earnings, so I'd like to see the pullback before earnings, maybe going into earnings off of that. So kind of look at that one for possible topping off of it in a low price land. AGN had a why was I looking at this? Oh, 200. It's pushing up to the 200. We got that psychological number. We've had a lot of resistance around 200 before, so kind of keep an eye on that for problems around the 200 mark off of this one. Run. We've got also a pattern developing on this one with the push. It's hitting the 127 off of the previous on its run up. So I'd like to see a little topping off of this run to see if we can get it pulled back on that one, going possibly into the earnings also. I'm looking for more or less pull back to about 17 or so. So maybe I have about a $2 move on the downside on it. Interested in Lyft because of what Uber did. Kind of hoping that we get the kind of the same report out of them because we've got a good basing here. So I'd like to see if Lyft can start gap filling. It's been holding this 23 since its IPO. So if we get a good report out of it, that's going to be a nice pop pretty much instantly up here to 57.5 or so like that, with room all the way up to the 70s. But I don't think they'll do that good to get it back into the 70 range. But I could see us getting up to the 56 area. So I could see about a $6 pop off of the earnings report that they got coming in. And I think it's like Wednesday, I want to say. A couple of days from now. So definitely keep an eye on Lyft. Key areas, I mean, they just got to do good on the report. Otherwise, it's a no-go. Rad. Got a curling that's starting to happen right here with a potential of an a C to D move starting up a little bit. So I'd like to start seeing this one. Get rid of these old lines. These are real old. I need to move my lines around. They got jacked up somehow. Some update they did. I'd like to see a push back up on this one. See if we can start getting it up to, start with up here about 1626. More or less the pattern I'm kind of looking for. It's kind of a screwed up looking one, and it doesn't quite meet the full fledged of a quality pattern because we have not gotten up to the 38 to make it a full-fledged one. So this is more or less a spirit one because this is more or less where we need to be. So I'd like to see if this thing can get some oomph behind it, but it may need PR for that to happen. Rite Aid had a hell of a run on its last report. It's got stabilization. I think it may try to start moving up a little higher levels before it goes to its next earnings report. So I'm kind of liking that. Plus, also with the virus and everything else, we start getting problems here in the States. They could start seeing increases of sales and stuff like that.
Could turn into a cup and handle, it looks like.
Yeah. So it's been flatlined for a while, but like I said, this is more or less a spirit one. This is a higher risk one because it's trying to make something out of nothing. And that's about what I see out there right now for the scans I saw. It came through on Friday. This is pretty much the only ones I saw that had some potential on those and all that. Yeah, so we got anything else in the chat that we missed?
Can you look at Square?
Square? Yeah, potential reversal zone here. A little bit higher than I'd like, but it's potential. How much we already pulled back off of this? 23%. So we haven't completed. Yeah. Yeah, retesting levels. It's just consolidating right now. But we can break down the 77 area. Then you'd have room down to 74. Be a first PT be 74. Secondary be down here at 69. So I think they're going to need some real negative news to get down to 69, though. That's a pretty big drop off of it. They'd have to have some sort of PR, I think, to come out to screw with that. The 74 would be more realistic on the technical side, especially with the earnings being so far out. If earnings was closer to where they're currently trading, then I would say, okay, look for potential miss, and then they come down this far. But this is kind of far out for us to have a news catalyst 2 weeks out here. So right now you got to basically just kind of look at it as holding its trend right here. If it can break that trend line, then it'll be game on down to the 38 to start. That it all depends on if they get PR or not. So it'll make a difference as far as if they're going to need a PR to go down to 61% pullback. Otherwise, it'll just be a technical pullback to 38. And someone popped in Earnings Whisper. Yeah, I love their charts that they do with the logos. That's just so nice.
What happened to them? I know that someone was saying they got like kicked off Twitter last week. There was some things where they were like being.
Mr. Redu was telling me something about it, but
Yeah, they got kicked out for like a day, and supposedly it was a Twitter mistake.
It's just weird.
Can you look at AAP?
well, it looks like we had a double bottom here off of 50, off of the major run from last year or year or so ago. Man, they really need to come out with a good earnings report. Otherwise, they're going to slip to 120. So when's their earnings? 18th. The odds are with this one is we'll probably get a little bit of a bounce back up here. Going into the report, probably get a little bit of a bounce back, retest that trend. I think you're just going to consolidate more or less. You may have some people coming in and look at more or less kind of like this trend right here. I can get those lines to line up right. So I could see a potential bottoming here, push up to that level, and then rejection off of it. More or less kind of these patterns, how we like to play these things. You can probably see a little rejection come back down or stable. I think it's going to stay in this little triangle area here going into earnings. It's more likely what you have. And basically, when you look at the overall big picture, what are you really doing? You're just basically staying with inside of the channel on this basic downtrend that's on right now. So you can make a few points, looks like, on a pop. So you already got the curling starting to occur. Momentum looks like it's getting ready to start coming back in. So you could take a long, just don't get married to it too long. Just push it up a little bit and then cut it once this comes up to that trend line. If you want to take a little scalp off of that, more like a swing scalp, I guess you could say. I look at swings. When I talk about swings, I like playing the big picture legs. These little things like here, when I know I'm just playing inside of a channel, it doesn't really, to me, these are day trades more than they are swings. Okay, anyone got anything else? All right. I don't think we did good keeping it at 2 hours. All right, guys, have a great weekend. If y'all need anything, just hit me up. I'll be in and out of the Discord all weekend if you need to talk or something.
Thank you for your time.
No
Yeah,
problem.
thanks very
Hey, Brad.
much.
Okay.
Take
Have a
care,
good afternoon.
guys.
Take care.
Thank you, man.
Thank you.